Bro, what is going on? What is happening today? I had to come onto the show a minute early just to say what the heck is happening. Ladies and gentlemen, Robinhood is now $136. Bro, I know no one's been able to pay attention today. No one. I know no one. If you at least have a little bit of Hood in your portfolio, you have not been able to pay attention today. If you have a decent chunk of Hood in your portfolio, you definitely have not been able to pay attention today. We're up $14 on the day. The reason this is happening is because of the S&P inclusion, which I thought was done on September 22nd when the official rebalance took place. I guess you learn something new every day. AppLovin is also up 7% on the day. Robinhood's up a bit more than AppLovin, but the reason those two companies are in is because they're in the S&P 500, and as a result of being in the S&P, funds have to buy more of their shares. I cannot find a single other reason for why Hood would be up 12% in a day. We have some bullish stuff that Vlad tweeted about a couple hours ago, and we'll go through some of that stuff, but that can't be the reason. I mean, the real reason has to be that S&P 500 funds, pension funds, et cetera, are buying. And as a result, we are seeing some pretty massive momentum. Pretty massive momentum. It's not banking. It's not prediction markets. I really do think it's end of month rebalance. And I didn't know that at the end of the quarter, the S&P companies that get included in have to get rebalanced. Like, I thought that happens the 2 weeks after it's officially announced. And I guess it happens towards the end of the month, but that's what we're seeing right now. Maybe this happens kind of more in the Q3 era or the Q3 timeframe of the year versus Q1 and Q2 because of the general rebalancing that the S&P 500 has to do as it gets closer to Q4. But regardless, this is quite incredible. I mean, at 1:21 in the morning, it opened at 1:22. We're like, all right, it's green. Got to 1:24. We're like, all right, cool. Got to 1:26. We're like, all right, that's not too bad. Got to 1:28. We're like, okay, could it break 1:30? Broke 1:30. And then I think I left when it was around 1:32. And since then, that extra dollar that it's gone up every hour, basically 4 hours since then, now we're at 136, has been quite incredible. So we got a lot to talk about around the broader markets. We got some macro stuff. We'll obviously dissect and go deeper into Hood, but a big congratulations to everyone who's having the stock. You guys know this has been a big part of my growth as just a creator and as a market commentator. Hood and Palantir have been two very big names for me publicly to dissect and discuss. And I think just so many of us came together for a thesis when this thing was at $7-8. And we really tried to dissect and understand, was this going to be a generational company? And yes, the stock has performed very well, but I think the company has performed so well that it feels like the stock should reciprocate. And that's kind of what we're seeing right here at 136. I mean, quite frankly, I didn't even know we hit 136 for the first time. This is the second time we hit 136. We hit 136 like 30 minutes ago. I didn't even know about it. And then I saw the 52-week high. I was like, oh, wait, we hit 136 and now we're hitting it again. So it's just been an incredible day. And it's the beauty of being an investor. Some of these days are just, it makes you happy to be in the markets. So pretty incredible. Now, outside of just Hood, and we'll get back to Hood in a bit, but the broader markets, I mean, Bitcoin's having a good day. Ethereum's not doing too bad. Bitmine's taking a little bit of a breather. It was at 54. Now it's at 53.30, basically just under 54. Not too bad. ETH's trying to break 4,200 again, 41.93, very close to doing that. Bitcoin again taking off, 114.350. It doesn't hurt for Hood, for Bitcoin and Ethereum to be doing well on a day like this. Again, S&P 500 index funds are the reason I think we're really getting a 12% day, but Bitcoin and Ethereum does not hurt. And you're seeing a lot of momentum across the entire market. NVIDIA, unfortunately, could not break through 184, touched it for a millisecond, came back down. Tesla lost everything. So Tesla, it looks like it was a pump fake in the morning when it got to 450. That just was not able to hold up. The weed stocks are going up because Trump tweeted some stuff about weed yesterday. I don't even know exactly how he framed what he said, but I guess the market got excited about that. Tilray Brands, one of the major weed stocks, that's up 55% of the day. So that's getting some momentum. And then you have the data center plays. Iran, that's up 9%. Very impressive after going down 15% on Friday. Nebius, that's up 2.29%. CoreWeave, that's up 2%. Cypher, which got an upgrade today, that's up 9%. And then you have TerraWolf. Cypher and TerraWolf also got some Google investments over the past couple of weeks. That's up 6.7%. I was speaking to a friend about 30 minutes ago who works in the technology industry, and he works at one of the hyperscalers. And I said, yo, bro, like, is this legit? Is this whole compute shortage legit? Is this whole Iran and Nebius and Wolf and Cypher transitioning their business models and basically encapsulating the demand that the Microsofts, the Googles, the Amazons, the Broadcoms can't deal with? Is this all legit? He's actually an early investor in Grok as well, which is another inference training company. By the way, they just signed a partnership with Grab, so that's actually the reason he texted me to show me that partnership. And they're doing a roundtable in Singapore. But he said yes. He said undoubtedly this idea of compute constraints and compute shortage is so real, and the business models around these companies that are basically turning into one-stop data center plays is not going away anytime soon because the hyperscalers simply need more help. And as a result of that, it doesn't seem like that's stopping. Robinhood right there, potentially trying to go for 137. I will check resistance. I mean, if we break 137, dude, my goodness. We'll talk a lot more about Hood, but here's the thing about Hood that's like exciting. If we normalize the 130s and the S&P gets to 7,000 by end of year, or maybe even a little bit higher than that, given how the market turns out. Bitmine, by the way, making a little bit of move up 7% right now. I mean, are we going to 150? Right? Because if we were at 115 or 120 and S&P was at 7,000, I would say, okay, we'll probably end the year at 130, 135. If we're at 135 and we don't give this up, and we got to see tomorrow, do we give this up? Because one day is nice, but like, do we actually hold this level of momentum? If we do over the coming weeks and we get that Q4 momentous rally in the broader indices, Robinhood's probably going higher. And the idea that this thing potentially touches 145, 150, I don't know if it's that crazy, especially if they deliver a massive Q3 beat. And Q3 is ending in a couple of days, so there is a shot they do that. 137, 9,000 shares, folks. 9,000 shares to get to 137. Shopify introduced some announcements with ChatGPT today. You can now shop inside of ChatGPT via Shopify. I'll share a video on that in a little bit, and we'll talk about the implications of that, but has to be bullish. Some people are saying this is bearish, Google. I don't think so. Google's going to have its own shopping portal eventually in Gemini. So Google is down 1%. I don't know if Google's down 1% on the Shopify ChatGPT news. If I had to guess, maybe that's the reason. But I doubt this is something to be bearish about when it comes to Google. But it does seem like the actual integration of personal shopping assistants, aka I'm thinking of getting some new shoes, ChatGPT, just buy this for me, is going to become very real. And if you can integrate via Shopify's API, then that's obviously very, very bullish for Shopify long-term. Robinhood right there, 136.64. CleanSpark, another one of these Bitcoin miners turn data center plays. That's up 15%. Having some fun. I mean, you're getting a lot of momentum across these data center plays that are not slowing down. Remember when Hood 50 support 2025 was the goal? Yes, Jason did dub Hood 50 support as the goal for 2025. And we are now at 136. I mean, the craziest thing is most people thought the move from 7 to 50 meant they missed Hood. And just like Palantir, you didn't miss anything. You had another 3x waiting for you. And a lot of people that I know got in around 50, 60, 70. They didn't even get in around, 8 to 30. And it's been incredible. It's been incredible for so many people. So yeah, very, 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 very exciting to see. We'll talk more about what's going on with Hood, but in general, this is just an incredible move for this company. And it's not easy for a stock like this to move 12% in a day. It has to be because of the S&P. But what I wrote on Twitter is just like, dude, when we were buying this thing a year and a half ago, now the beautiful thing about the stock market is that institutions have to fight between 129 and 130. And we got to buy it at 20 or 30 bucks simply because we were earlier to the party. And it has to be so incredible to sit back and let the biggest financial institutions in the world fight to buy Hood at these prices because they have to. It's like forced liquidity because of Hood's execution to the point where they got into the S&P 500. Like if the insiders wanted to sell a ton of stock today, they could easily sell stock and be rewarded for all their hard work. And there is someone willing to buy. If you, as a retail investor, wanted to sell stock today, you could easily do it and change your life with whatever profits you get simply because of the forced liquidity from these institutions. And that's very special. It's not easy to be in stocks that have that opportunity, but Hood gets to have it today. It's quite amazing to see. S&P 500, 663, grab recovers from 593 to 612. We have bought some more at 597 today, so it's doing a really good job, hopefully normalizing that $6 range. So not too bad to see it breaking back above 6 into the close. AMD 160, 175. That's up again. Bitcoin and Ethereum doing their thing. AppLovin, that's up 7% on the day. Coinbase 7%. Let me check the stock draft. I've not even looked at that all day. And that might be continuing to do strong. Yeah. So there you go. Matt's up 26. I'm up 32.8. Duolingo's helping out a little bit today as well. Steve's up 5.6. Tanner's up 23. And then Chris is up 8.1. You guys know how much I love Steve. Like, you know, he's a brother. I love him. I'm happy he's starting his own YouTube channel. I support him in all of his endeavors. This just was not the right day to put out this article, bro. This was just not the right day to put out this article. Robinhood up 226% year to date. A retracement is likely before the next breakout. Yeah, it was just not the right day. It was just not the right day. He could have, he could have just kept that one waiting until he actually saw a retracement. But yeah, but see, I don't even think he knew that the S&P 500 was going to freaking buy a put today. If I knew that, I would have bought way more on Friday when it went to 121. If I knew the actual day of inclusion, because it seems like September 22nd was nothing for Robinhood was going to be today, but I didn't know that either. So this caught me off guard, and you're getting some momentum right there. Tanner, I see you in the chat. Tanner, I'm going to send you a link, and after the market close, I definitely would love to get your thoughts on this. Tanner, Roy, and I will get a podcast later out tonight, and so we'll be talking about everything going on with Hood. But Tanner, if you've got 5 minutes, absolutely, I'm sure people would appreciate your perspective right here. Robinhood is completely blown away. I mean, dude, on the last Tech Bros Weekly, me, Roy, and Tanner unanimously agreed 130 to 135 end of year is where we think this stock is going to end out. It is at 136.50 right now. I mean, I think the bar has been raised. I don't know how this ends up playing out. I can't even think of giving a price target anymore because it has just gone past my expectations. But it's very exciting to see it. Now, one thing that Vlad did announce today, 4 billion prediction market contracts have been traded all time, 2 billion in Q3. They make 1 cent per contract. So they made $20 million in Q3 off the 2 billion contracts that were trading. Piper Sandler has them doing about 200 million a year. So that would be assuming around 20 billion contracts that would be happening in 2026. And I think this product is just going to keep growing and growing. By the way, that 20 million, 95% of that 20 million has to be profit in terms of, it has to barely cost them much less 2 to 3%, if not 5% to service the prediction markets. And so that should be $20 to $15 million of net income added to the bottom line, which is juicy net income and very good for a company that's growing as fast as Robinhood. Yeah, 4 billion contracts. They launched this less than a year ago. They launched it in November last year. And my thesis here, and we'll talk about it more after the close, but I just think they're going to take the approach of attacking a vertical like prediction markets that Robinhood had no business getting into. They're going to dominate it. They're going to learn how to make customers have the best product, best user experience in that vertical, and then they're going to make it the cheapest. And I think they're going to do that for like 15 to 20 different verticals over the next 10 years. If they do that, Robinhood is going to $1 trillion. Now, it's not going to be easy to do that, and there's a lot of execution that's needed. But prediction markets is going to eventually become $1 billion business for them. If they can do that with 15 to 20 other different verticals in the space of finance, or maybe even out of finance, because prediction markets, I don't think anyone thought was in finance, and turn those into $1 billion businesses, this is going to be a company that does billions in net income, tens of billions in revenue, and have trillions of dollars of assets. And I think that is the most exciting thing to see about Robinhood right now. Bitmine right here, that's up about 4.2%, selling off a little bit as we get into the close. Grab at 611, SoFi 1.5%. Again, I would not stress too much about SoFi. I know people are annoyed. Morgan Stanley issued some price target upgrade from 13 to 18, but he still said to sell the stock. So that's probably why the stock is down today. I really don't think it's that big of a deal. Rate cuts are bullish for SoFi. They're probably going to have a monster Q3. So I think it will end the year above $30. And right now, you get a crappy price target. That's what ends up happening some days. Circle right here, that's up 5%. AppLovin, that is up 6%. And then Hoodie, she's going for the 136 close. She is going for the 136 close. I mean, what happened to the months that after when Palantir got into the S&P 500? I'm wondering if we keep running or sell off from here. So it's a little tricky because Palantir kept going up, but 2 months after they got into the S&P 500, they also got into the NASDAQ 100. And I think that created even more momentum on Palantir stock. So I don't know if Robinhood is going to get into the NASDAQ 100 by end of year. If that doesn't happen, I'm just not sure how the story ends up playing out. But if we do have a bull market run towards the end of the year with Bitcoin and Ethereum helping and just a strong Q4 and S&P 7,000, I mean, I think it's too early to say we have definitely normalized the 130s. There's a lot of big money that bought today that's probably not going to easily sell. So I want to say we've normalized the 130, but I think we need at least a couple of weeks to see, hey, did we actually hold 130 or can we actually hold 130? And if we do, then maybe, the 140s or 150s are in play if they execute in Q4. So we got to see. But very, very, very exciting stuff so far on Robinhood. All right, here we go. We got 20 seconds. We got a bunch of other headlines that we will talk about. We'll see if Tannor can join us today. And we'll kind of get his thoughts on what's going on with Hood. But congratulations to everyone. This is a massive, massive day. It's not easy to have days like this. It's way more fun to do it with the community. And very, 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 very special and very grateful to this entire community, to Vlad, to the employees, to the execution of the team. It's quite incredible to witness this happening in front of us. Monday, September 29th, 4 p.m. Thank everybody for being here. The stock market is now closed and Robinhood closes at an all-time high of 136.84. All right. We are done for the day. We're at 136.90 after hours, bro. If it blows through 137, that is going to be quite incredible to see. But Robinhood ending 12% on the day. I don't know the last time we had a 12% day. It had even the S&P 500 day. I think it was like 8%, 7%. So maybe like 10% at most. The fact that it's having this type of a day based on the rebalance, very, 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 very excited to see. The bell was broken. It was a Temu bell today. We got a muted bell today. Dude, the Robinhood strength was so strong, it freaking muted the bell. I guess that's what happened. We rang it at the beginning of the show, and it was okay. I guess the strength since the close was just too strong. There you go. Robinhood up 12.29% on the day. Palantir got a $410 million one-year contract today from the State Department. We'll talk more about that later, but I talked about it on the market open. Shout out to GoCarp. He found that data. $410 million, September 29th. It starts 2025. It ends September 29th, 2026. 1 year, $410 million, not 5 years, not 10 years. 1 year, almost $500 million. Absolutely incredible. And so Palantir continuing to gain momentum. Tesla right here did give up a little bit of the momentum, went from 450.98 down to 443, but still ended green on the day. NVIDIA, I'm happy we got a 2% day. Not too bad for NVIDIA to go up 2%. S&P 500 right here up 0.28%. AMD up 1%. SoFi, again, down based on that Morgan Stanley report. Google, I guess, down based on Shopify and ChatGPT. We'll talk more about that. Grab 612. Meta flat on the day. Salesforce flat. PayPal was actually up 5%. PayPal was up 5%. And it came down to 69.98. So it's basically down. It ended 4%. Actually, it was up like 5.5%. So it gave back about 1.2%. Nothing too crazy. I think something around the advertising business maybe got the street excited today. No major headlines, but that one did end up about 4% on the day. Ethereum 41.80, Bitcoin 114, TLT was up a little bit. App 11, that's up 6.3%. Circle was up 5.3. We're going to talk about the dollar in a bit as well. We have some new stats on that. TLT was up because the 10-year was down 4.145. So you did get a little bit of downside on the 10-year, which is not too bad. And then BMR had a great day. I mean, I know it didn't hold that 55 level, but still 52.39 above the 50s is nice to see. And that got some momentum. All right, so headlines. Let's see what we've got going on. First of all, Google just announced Claude Sonnet 4.5 on Vertex AI. Claude Sonnet, or I should say Anthropic, introduced Claude Sonnet 4.5 today. And they had a lot of stuff to introduce. There was a lot of perspectives and thoughts about this newest model. Here is the release right here. Essentially, I'll put this in the chat, but this photo that Claude tweeted today is basically saying we are better than every single model, especially when it comes to coding. And part of the analysis that one of their chief product officers that we'll listen to in a little bit said is that this blows away GPT-5, particularly at coding, which is a vertical that is so special because tech companies pay a lot for software engineers. So if they can automate that or replace that or make it more efficient, they would be willing to pay a lot for these LLMs that can code. And GPT-5 so far, based on the results we saw from Claude Sonnet today, is nowhere near the efficiency of Claude's on it. I mean, Claude's beating it by like 5 to 7% on pretty much every metric, particularly around coding. And it's beating Gemini 2.5 really well as well. So the question is simply going to be, how well does this scale? How many companies potentially choose Claude over ChatGPT? But that is one thing that came out today. Maybe that's also why Google was down a little bit, even though I think Google's just going to be working with Sonnet. It's not going to be as competitive. But Google right there at 244, slightly down today. GameStop was up 3% of the day. Intel ended up going down about 2.8%. It was at 37 in the pre-markets. That one took a little bit of a beating. Duolingo, that was up 1% of the day. Iren, again, great day, 9.65%. Bitfarms, CleanSpark, all those guys, massive day. Bitfarms up 10.3%. Then CleanSpark right here, up about 15% on the day. Wolfspeed, I still have no idea why this stock is up today. Wolfspeed, is it at 20? It's at 10%. Okay, in the morning, it was up like 1,700%. I don't know if they were doing a reverse split or something. I have no idea. But this company's supposed to be going out of business. I don't even know why. They filed for bankruptcy twice. Unless they're not going out of business. I have no idea. I have no idea what's happening right here. But this one, it reverse split and diluted. Okay, so that makes sense. But I'm confused. If it reverse split and diluted, why are they even trading if they were supposed to go bankrupt? So a little confused on that one, but I guess we'll get some more details soon. And then Open Door right here, that was up about 7% on the day. So not too bad. It's post-bankruptcy. They're now trading again after a Chapter 11. Huh. The fact that people are still willing to trade it, pretty incredible. But all right, looks like some dilution and reverse split is why this one is up 10% of the day. Nike does not have earnings today. Nike is tomorrow, not today. So we'll take a look at what happens with Nike tomorrow. But on the day, it was relatively flat. And then tomorrow, we're going to see what ends up playing out. We do have one earnings on Progress Software. I did not know about this one. PRGS, Q3 earnings. They beat on EPS. That's up 15% year over year. Revenue, they beat by about 9 million. PGRS, that stock is up 5%. It's actually a $2 billion company, not a super small cap. Engages in the provision of products that develop and deploy mission-critical business applications. Looks like it's a SaaS company. That is up about 6% on the day. All right, let's bring in some perspectives from some OG hoodlums to kind of give us some analysis on what the heck happened today and how they're thinking of some of this price action. Ladies and gentlemen, Mr. Tanner. Tanner, what's up?
How's it going? I come in here with brand new information, breaking news.
Oh, I got. Go ahead, you break it. You got it. I already know what you're going to say. Go ahead, do it.
Yeah.
Give us the news, Tanner. What do we got?
Go ahead, share the screen. Robinhood shares their September 2025 month-to-date trading volumes. So this is from September 1st to September 25th. So I'm going to break down what this means for them in a second. You're going to need to give me a second while I just plug in some of these numbers. I just got it. But equity notional trading volume came in at 206 billion. If I'm not mistaken, that's that's nearly their highest. Their highest was 209, and that's not even including the rest of the days that we have. Options contracts, 187 million. That's also insanely high. Crypto notional volume, approximately 8 billion. That's not super exciting. And then Bitstamp on top of that, 12 billion. High majority of that is institutional. So that's not super great on the crypto side. But remember, it's not the full month anyway. So this is probably, going to be 10 billion or something like this, or sorry, maybe 9 billion or something by the time we actually finish out the month.
Also, September sucks. Usually for Robinhood, historically, September sucks on equities, options, and crypto. So we'll talk about equities and options in a bit. But crypto, it's not as great, but it definitely doesn't suck like it did last year, which is good.
Bro, I think September will be the highest equity notional volume we will ever see so far. I mean, the difference between 209 and 206, while missing out on 5 days or what, I don't know however many trading days. I'll need to count here in a sec, but that's a lot. Friday, Monday, and Tuesday is what they'll have left. So 3 more trading days on top of that. I don't know if they gave us the darts. No, they didn't. But I'll see what the averages look like and then see how much of a smashing quarter it is. How is the after hours responding to this? Are they getting this?
I forgot this data was coming out today. So I'm happy you brought, I completely forgot 136.74. I mean, it's not breaking 137, but this is definitely not bearish data. Crypto is, as you said, not the best, but you and I both have studied their Septembers historically, and September usually is just like not a great month. So the fact that they were, but September's not a great month for the market. So the fact that the market held up, I mean, shows that this Q3 might not be a bad quarter.
If we look at the last 2 quarters or the last 2 months, I'm being hyper cynical here. But Robinhood app crypto did 16.8 billion, then 13.7 billion in August. Now we're probably going to see 9 billion or so in September by end of month. Not super great because of how high margin it is, but yeah.
Well, one thing is they probably, I would bet. So 2 things. Number 1, I think they probably increased their take rate a little bit. So it doesn't fully compensate for the lack of volumes, but it helped a little bit. Number 2 is, and we'll talk more about this, prediction markets. I mean, Vlad just basically said they did 20 million of revenue off that, which is likely 20 million in net income. Maybe that makes up for a little bit of the crypto slack, which still gets them to hit their strong numbers.
Yeah. As for that tweet that Steve put out, I can't even believe this, dude. Not only the timing, I feel bad for the guy. It's almost like it was bad. But that being said, like I was talking to him the other day, he seemed very positive. He was using the prediction markets. He was talking about how he's going to buy the stock on a dip. I haven't even read the article, but come on, man.
Well, I don't feel bad for him because he just launched his YouTube channel. He's doing great. He's getting all this love. But then I saw this tweet today. I was like, goodness gracious. I didn't even text him about it, but I want to be like, bro, any other day you could have tweeted that shit. Not a day like this.
Yeah.
It is.
Yeah.
You know?
It's insane for a company this large to be moving this much. I mean, we're talking about $121 billion company now.
Yeah, and now you talking about Steve waiting for a dip. I mean, bro, this thing goes to 125. That's a dip. That's a 10% dip.
Yeah.
Like you usually buy stocks on a 10% dip. Like, what are we? So, okay, give me your raw reaction, but what were you doing the whole day when you saw this going up another $1 every single hour? Like, how are you processing the move that we saw today?
I mean, just a little in shock, very surprised, but I'm not going to do anything with it. I'm not selling any shares. I'm not like, I'm here for the long run, you know? So I think this actually just brings in more brand trust. People trust really large names. They don't want this to be a dinky trading platform. You know, this helps Robinhood. This helps their employees. It helps us as shareholders. So I'm very happy to see the move, but I wasn't like, this didn't change anything for me. Overall, I'm excited. This is not, as a percentage of my portfolio, I don't hold anything near what you hold in this name. So for you, unbelievable, you know? But yeah.
It was a big day, but in general, I think just like as a creator following their journey, it's got to be crazy to actually see the move happen, you know?
Oh yeah. Yeah. No, you feel vindicated. You like, well, I felt that a long time ago. I mean, for me, from my original investment, I'm coming up on a 10x. You're coming up on a 20x from your original investment. You know, it's insane. You only come across those every once in a while. People say once in a lifetime, but they have, like, I don't know. It's been very growth-esque since I've been in markets. 2015 till now. I mean, you've had once in a lifetime opportunities in 2018, 2020, 2022, Liberation Day, times in between. So it is extremely special. And I'm here for, like, I want to get what you got, right? I'm here for the 20x and beyond. And as long as they keep doing what they're doing, we're only seeing just the rollouts of banking right now, which I'm very adamant. I think that's going to double their business. So, where do they go from then? Do we get into SMBs and do we do exactly what, Noto's been trying to do, but Vlad's the guy to actually pull it off? I mean, because their team runs at everything in every direction and somehow is taking market share, even though they're focused on 10 different things. It's incredible.
2 quick questions for you, and then we'll get you out of here. Number 1 is selling and taking profits. I mean, I know you have a really long-term trajectory, but you think this thing's getting overvalued? It's getting hypey, frothy, or how are you thinking of the stock itself?
No, short term, yeah, it looks more expensive now than, potentially ever. Um, but I don't want to sell any shares. I think that, you know what, I try to base my companies based on how they're doing in the market. If they're taking market share, I'm a total addressable market investor. Robinhood seems to fit into that perfectly. They're dominating. So I've got no reason to cut my share back in this company. I'm I'm holding for brighter days into the future. And I think that they'll come. Right? Like crypto is going to absolutely blow up for them. We only just saw them launch perpetual futures and launch the Robinhood chain, which actually, well, it's not even fully launched yet. Staking, all of these things, they are going to be huge additions to their overall revenue. Like, I think people are underestimating the amount of new products that they've actually pushed out. Like, we've seen a lot of announcements, but we haven't actually seen that come in the line items of their profits, right? So, like, the growth rates that we've been able to hold up, I think might actually be sustained longer than people think, as long as they can continue to bring on new customers onto the platform. And if I'm following X or I'm following a bunch of other platforms, people are getting sick of the bugs and the slow product rollouts and, all of these things that either other brokerages have been slow to adopt or not doing what their customers want them to do. And Robinhood is doing all of them. So you constantly see people pushing more and more of their money over to Robinhood. If that continues to happen, like the day that starts to slow down or we see some headache, I'll reassess from there. But I haven't even really seen banking come about, staking, crypto, Cortex is not even really, taken off yet. So, I mean, this still feels early game,
Just
which is
so many
crazy, but
products.
it's true.
So many products, so many verticals. I agree. All right, last thing for you, Tanner. And again, everyone, please make sure you're probably already following him. But if you are not, there's Tanner's Twitter right there in the chat. Please make sure to give him a follow. The prediction markets, I mean, I bet on it for the first time. It was a pretty exciting experience. Who would have thought sports betting is fun? How big do you think this market is going to become over the next decade?
I mean, very big. And I don't know. I'm not going to use it for the degen gambling purposes. But you know what they started to talk about, like Polymarket getting into betting on earnings going up or down or these sort of things. I love those ideas, not as a gambler, but as an investor. Like, for example, you probably know that I have high conviction that a company like SoFi is going to beat on earnings versus its consensus, right? But what the stock is going to do is a very different story. Okay. So they can end up triple beating across the board and the stock can end up falling on earnings. That's SoFi. But I have high conviction that they are going to continuously beat earnings. So let's say the chance of me going to a prediction market that, eventually Robinhood's going to have ends up telling me, oh, there's a 85% chance that SoFi ends up beating earnings or an 80% or something like this. I'll bet yes on that because you know what? It guarantees, well, not guarantees, but if I think there's a high probability that SoFi ends up beating earnings, how many days does earnings do you see a 15% pop on earnings day? So if I think about that in total return, that's an easy way for me to bet and take out profits immediately. And then if the stock does fall on that news, I can then end up buying the stock with my profits on Robinhood in this exact same brokerage. Yeah. So using it as a tool to invest and hedge investments or play certain earnings or life events, I think is absolutely great. A bunch of people talking about how this relates to sports or things being thrown onto a court or whatever, I think is absolute degeneracy. Go ahead, your money, you're an adult, but there's certain ways that you can look at it other than that. I think this is going to get super popular and people are not going to want to transfer their money into some crypto platform or Kalshi alone just for their gambling needs. They want to be able to just take money right from their account that they were just going to go, buy a burrito with, and then transfer it into prediction markets, make a bet, win, and then go buy a steak, right? They got it right. They buy a steak. They get it wrong. They go get ramen, whatever. That's the amazing part.
Also,
go ahead.
Go ahead.
No, I'm just, this is exactly what I was saying about blockchain being early and banking being early and all of these things. Prediction markets is so early, and now we're just starting to see it kick off, and a bunch of analysts are changing their price targets as if, we didn't see this coming. Of course this was going to happen, but they have to wait to see if the products are actually going to succeed. I already know Robinhood Banking is going to succeed. I don't need to wait them to change their price targets, So Yeah, feeling confident. Can't be happy enough.
I was just gonna say World Cup is next year. So like that's gonna be massive. I mean, there's just so many sporting events that are gonna lead. I mean, DraftKings, FanDuel, Flutter, all these companies literally thrive on sports. Robinhood has barely started getting into what a sports betting ecosystem would look like. I think that's another $1 billion of revenue for them over the next couple of years.
Man, Warren Buffett was early on this. The idea that like financials make a ton of money, like a ton. And the way that Robinhood's doing is they're not taking on any risk products. It's all brokerage, spending, banking, but they're not dealing in any real credit risk. So they're even the mortgages and stuff, they can benefit off that, but they're just giving it out as referral.
Yep.
That means that they can get the multiple, they don't risk any future earnings, and they can grow extremely fast like financials do. So Vlad's ahead of the game right now. Happy guy.
I love it. Thank you, Tanner. Really appreciate your knowledge. I'll see you at 9:30 on Tech Bros, and we'll talk more about this.
Cool, brother. Thanks for having me.
Thank you. Talk later. All right. Pretty exciting stuff. Pretty freaking exciting stuff. Tess says, I can't believe Amit knows what the World Cup is. Okay, I know what the World Cup is, okay? It's when the people like throw the ball into the net or kick the ball into the net. Kick the ball. It's because soccer, right? They're kicking. So that's dude, the only World Cup game I watched in 2022 was the final game with Messi. And I was just so happy to see him win because it's like, you know, you want to see the greatest of all time actually get that win underneath their belt. But I did not watch a single World Cup game before that. But I'm going to be more interested this time because now we got prediction markets. And so that could be a massive tailwind to Robinhood as well. Nathan, thank you for the 136.71 super chat. I appreciate that. That is the closing price of Robinhood. Means a lot. Thank you for deepening my conviction in Hood. It was a pleasure to meet you. Keep up the good work, my man. It was awesome to see you in Vegas. It was awesome to see so many of you at the Vegas Hood Summit. I think Robinhood was like 105, 110-ish at the Hood Summit. I think maybe it was closer to 120. So pretty awesome even since then to see this momentum based on the S&P inclusion and and get to be part of this journey with everyone. Super cool and very excited and grateful to be part of this entire journey. So there you go. Robinhood right there, 136.72. We'll talk a little bit more about it later. I want to get into some other topics we have as well. So two things, and then I want to play a clip by one of my favorite analysts from BMO Capital about why they raised the S&P 500 to 7,000. Oh yeah, I forgot. Nathan won a gold bar. I forgot. Nathan, yes, shout out to Nathan at the Robinhood did a gold bar giveaway at the end of the summit. Nathan ended up winning it. That was wild when they announced his name because it was just like, what? Like Nathan's been following the journey for like almost a year now. So congrats, man. That is super awesome. And he got the freaking gold bar. How much was the gold worth? Was it worth? Was it a full, like, I think it was about like $2,000 worth of gold or something that they gave him. But it was a big ass gold bar. Oh, 10 ounces. Okay, cool. Yeah. So there you go. Not too bad. And that's what he won as well. Gold, by the way, hit an all-time high today. We'll talk more about gold in a second. It has been kind of crazy. 38.58 is what you have on gold. Does not look like that is slowing down. So two charts real quick, and then we'll keep going from there. So today adds to the S&P 500 not having a negative day of 2% or more. The last time we had a 2% day was back in April. We have gone 108 consecutive sessions without a bad day for the S&P 500 going down about 2%. So, I mean, pretty incredible. Obviously, we're seeing the market continue to maintain this momentum. And I think we're all expecting that inevitable 2% drop. When it does happen, we'll see if people buy the dip. But so far, that hasn't happened at the level that I think some people were hoping for. And then, speaking of gold, you also have this right here. Gold ETFs have got $2 billion throughout the month of September so far. Year to date, 13.4 billion has gone into gold, and 7 out of the last 8 months have been net inflows for gold. I was talking to a couple people today actually about commodities, and one thing that they told me was that it's very rare for gold and silver to go up along with equities going up. Now, I think we all kind of know that usually gold and silver going up kind of gets you to think, all right, there's going to be a little bit of weakness. Maybe equities are going to take a breather. Something is going to happen. But maybe that's not exactly how it plays out. And maybe the reason that that's not how it plays out is because at the end of the day, equities are where you want to be. I mean, even Apollo came out with a chart today and said, hey, the dollar is continuing to lose value. Now, their implication is that a lower dollar could potentially boost inflation, which obviously would not be the best thing in the world for equities. But it goes very much in line with what Evercore and Goldman Sachs have been saying, which is that if the dollar continues to lose value, your assets have to be rooted in something that is better than holding cash. Bitcoin, Ethereum, gold, silver, copper, the S&P 500 has to be something that's different. And I think that's some of the momentum we're seeing across the entire market for these different assets. Here's BMO Capital, their official upgrade to 7,000 on the S&P. And this is their logic for why the S&P probably gets 7,000 by the end of the year.
We really do. That's just, I go back to my very first months in the business. My very first mentor was William O'Neill in Investors Business Daily. And he said, Belsky, there's always something going on in the markets. You just threw a bunch at us. And I think you have to try your best, Scott, to kind of push that to the side and really focus on something that you and I've talked about now for the majority of 2025 is that this rally has been led by fundamentals. This rally has been led by earnings recovering. This rally is going to continue to be led by that. And that's why we felt so compelled to finally move our targets to our bull case, which we originally published in November of 2024, which was 7,000. So that number's been out there for a while. But what we really needed to see are those earnings begin to accelerate. And our earnings number of 275 has been there for a while. We actually think that into next year, we're going to see another 8 to 10% earnings growth. So what we really think has gone on the last 6 months or so is that 2025, quite frankly, is set the table for Goldilocks for 2026 and 2027.
All right. So the headline here from you, just to make it clear, you raised your target back to 7,000 as a bull case.
Yep.
So when I sort of throw out there the risks and rewards of buying stocks at record highs, which ostensibly we are at, you see much more reward than risk?
We do. And, quite frankly, we wrote in the piece, too, that we knew we would get a lot of pushback, like, way to go, way to call the top Belsky, or you're Pollyanna positive and all this kind of stuff. But what's wrong with stocks going up? It's actually a really, really good thing, number one. Number two.
I agree. What's wrong with stocks going up? It sounds so toppy, but like, what's wrong with it? It's great to have stocks go up. We make money. But no, he's going to go on and to justify why the earnings probably mean that stocks should go higher.
I think it justifies that. I think actually 7,000 by year end could be too low. I think we could probably go higher than that and then all of a sudden settle in 7,000. I don't want to just be as easy as the trend is your friend and like that, but we also have this notion of a lot of cash on the sidelines. We have a fourth quarter that hit traditionally when you see a market that's up 15 to 20% the first 9 months of the year, the average return is like 5.6% going back to 1950 or so. So seasonality is involved, but also the believability of equities are back in terms of it working, and the believability of the U.S. markets to have some wherewithal is also back.
So I have a little bit of an issue with the Goldilocks moniker. Can you have Goldilocks with stocks not only at record highs, but with valuations where they are to historical averages? I don't know. Is that Goldilocks?
Well, Goldilocks is the notion of interest rates staying steady, earnings growth being positive, GDP growth being positive. Doesn't have a valuation metric to it traditionally, but I think that we're heading back. And I was a strategist back in 1995, 96. I think we're heading back into that era again, where toward the end of 96, you started to see a broadening out of the market away from just the consumer staples, high multiple stocks. So remember, too, that the multiples peaked in the 30s during the tech wreck of 99, 2000, really into 2000. So I think we got a long ways to go. I don't think we're anywhere, any kind of bubble territory for tech.
Inflation.
Look, I think that BMO's argument makes a lot of sense because at its core, the argument that they're making is that earnings growth is going to keep the market afloat. If that earnings growth goes away because of some, rapid deceleration of the economy, then that would be bad. If it doesn't, then again, where do you put your cash? You probably put it into equities, as long as those equities can maintain the earnings growth. You guys saying you saw 137 after hours? I didn't see it. It probably was super quick, but if you did see it, then maybe we get it again. The question becomes, where does this go? And we'll talk more about that in a bit. Where does this go over the next coming months? Because now that the stock has basically been re-rated today from 120 to 136, It could easily go back down to 120. I mean, that could happen. It's not normalized yet, but if it doesn't and it kind of stays within 130 to 135, I mean, where is the upside going into the end of the year? And I think we might actually have some different catalysts that could get us there. So that's definitely one thing that we have to think about. 136.98. Yeah, it's close. It looks like it really wants to break above. Well, yeah, I see it right here. We touched 137 for literally a second. It was about 2 minutes ago. And now it's trying to break above. Dude, I did not know Nathan got a 10-ounce bar of gold. I thought it was like a couple grams or something, dude. That is crazy. Nathan, congrats, man. That's $38,000, right? That's an ounce of gold is $3,800. That's $38,000 in a 10-ounce bar of gold. Like, even when he showed it to me, I didn't think it was like that. I guess it was way, way more than what I thought, but that is pretty incredible. I think Robinhood also gave out 3 of those for the September deposits. Or no, September's not over yet. So they're going to be giving out in October to 3 people those 10-ounce bars of gold based on the number of deposits you had in their lottery system. And likely in October, we're going to see more, but not too bad. Not too bad at all. 137.11. There she is. 137.11. 137.19. Oh boy, she is breaking through after hours. Breaking through. Goodness gracious, bro. My goodness, she's not stopping. Rango says, I had some gold bars stashed away from Costco a few years ago just for the giggles. Didn't expect it to be twice as much. Well, gold is at a monster year. Along with silver. Silver almost got to all-time highs today. So those continue to move. Wow, 137.40, bro. Volume after hours. Average volume is 50 million. Today's 61 million. You're starting to get a bit more volume after hours. And it's not stopping. 137.29. Okay, so if you have covered calls on Hood, let's talk about that because I know a lot of people are stuck in some ugly covered calls. Look, here's what I'm thinking. If you're in covered calls, particularly that are now underwater. So, for example, you have 120 covered calls, 125 covered calls. Yeah, 130 covered calls. My immediate reaction, well, actually, let me preface by saying this. You have to ask yourself how convicted you are on this move. Because if you are not convicted that Hood can actually hold the 130s for whatever reason, right? Maybe it's a little bit too frothy, October pullback, whatever, then you stay the course and you don't do anything with your covered calls because the stock will naturally come down. You'll be able to get out of your covered calls and you'll be okay. If you think, nope, it got re-rated, unfortunately, I messed up. My 125s are underwater. Maybe it gets back to 125, but you don't want to take the risk. I think then you have to roll. And the rolling part is a question of essentially the time frame you want to have on these contracts. So, for example, I mean, if you're super, super bullish Hood and you have like a 120, 130 covered call, you can easily roll to January 2027, probably to 170, 180, 190, maybe not exactly 190, but you can get 30 to 40 bucks above your current strike price. Does it suck because you can't have the stock for, you don't have access to the shares for a year? Yes. But as Adam says, and this is really, I believe in this philosophy as well when it comes to covered calls, owning the shares and the capital appreciation on the shares, if you have 1,000 shares that you had to sell at 130 and then it gets to 180, you make $50,000 because 180 minus 130 times 1,000 is 50 grand. You're likely not going to be able to generate 50,000 in premiums easily, especially when the stock potentially is going parabolic. And then obviously, if they keep crushing it with their earnings and their product events, like it might just not be something you want to risk. If we get a massive recession in 2026, it's a different story. But if that doesn't happen, if you're not willing to take that risk, then I think you roll it out. And yeah, you don't have access to covered calls for a year on those shares, but who cares, right? Like at the end of the day, the appreciation of the stock should be worth more to you than the premiums itself. So I think that's one thing you do. Number 2 is you can buy out the covered calls, right? And take a loss on the actual money of debit you have to pay minus the credit that you got for writing the covered calls. And then you can let the shares go free. I mean, that's one strategy. And that's more so a question of if you just want the freedom to navigate the shares, and then you can maybe write covered calls later to collect the debit that you ended up spending to get out of the covered calls. But I also think rolling 6 months to a year out and getting a much higher price target, because look, I don't know what happens in 2026, but it might not be the easiest for Hood to make a move that it made in 2025, up 200% on the year, simply because the comps are going to be tougher and maybe the market's not as exuberant in terms of trading volumes. Now, maybe it is and Hood goes past 250. I mean, who knows, right? But like that is one thing that you have to really think about. when you're navigating, where these covered calls go. The other thing is, maybe if you're at 125, you roll to like 150 end of year, 140 end of year, maybe you pay a little bit of a debit, a couple $1,000 if you don't think it gets that high by the end of the year. And then you kind of take that loss, but also get your shares back towards the end of the year in a shorter time frame. I think the number one question when you're dealing with these covered calls is, do you believe the stock has the momentum to stay at these levels, get above these levels? And it's really hard to ask yourself these questions, right? There's a lot of people in Palantir that got screwed on these covered calls simply because they didn't anticipate it making the move that it did. And then when the dip happens, like Palantir fell to 70, people get too greedy. Palantir fell to 140 a couple months ago. People got too greedy. Those are the moments where you take a less of a loss, even if you take a loss, or you get out of it completely and you move on with your life. But if you think, oh, well, it fell to 140, now it's going to fall to 120 and I'll be able to save some money, that ends up sometimes not working out if the dip ends up getting bought. So those are the ways that I would think about it. Yeah, 145 for Friday, I would not be stressing. I mean, if we get to 145 by Friday, it is what it is, bro. Then you can just roll that for another couple weeks and keep it at like 145 to 150. 165 for December, I also wouldn't be stressing. I mean, now granted, this is the mistake I made with Palantir. The mistake I made with Palantir was like, okay, it got to such a level. Like, do we really think it's going to keep getting above that level? And it ended up happening. The way I kind of hedged that mistake with Robinhood is I kept buying Hood into strength. I have not bought Hood since 124, so I've not bought in the 130s. But could it be the same situation as Palantir as Hood just re-rates over and over again, and this thing ends up in the 180s? I don't know. Palantir is a little bit of a different company, a little bit of different Colts, a little bit of a different way the institutions think about it. A lot of the institutions had to buy Palantir. The institutions are already in Robinhood. Also, they got into the NASDAQ. So there's a lot of different variables, but are they two generational companies that can hold a pretty aggressive premium? Yeah, I think so. The question is just how large does that premium get for Robinhood? Ethereum right there, 4,200, and Bitcoin 114.5. So that one moving as well. Now, again, the question is, where does the stock go? And I don't have an answer to that question. All I can say is I'm pretty excited because if the S&P is headed to 7,000, I don't know if it will, but if it is, I don't think Hood's stuck here. Now, granted, maybe I'm wrong. Maybe Hood has priced in so much growth that the street's going to be like, okay, we gave you the multiple. You're going to keep the multiple. We're not going to keep expanding the multiple. You get to stay at 130, 135, but you don't get to go further than that. Maybe that's the case. And by the way, we went through that in August. Hood was stuck at 100 to 105. I mean, you could not get any momentum on the stock simply because it had 3x'd in like 5 months. And the street was like, in my opinion, okay, cool. You got to show us something new for us to be really excited. There's not that many other catalysts besides banking, which I do think is a big catalyst, but I don't know how widespread that launch is going to be. And then earnings, which earnings will be good, but one could argue that earnings potentially are getting factored in to the multiple. So there is an AI event in December that could potentially be a catalyst. These are just things you have to think about in terms of what happens with Hood. What does Hood need to do to be into the NASDAQ 100? I don't know. What the NASDAQ 100 is mainly for technology companies. Hood, in my opinion, is a technology company. In fact, Robinhood said we're not a fintech, we're a technology company that operates in finance, which I think is such a good way to describe their positioning in the marketplace. But it's not described as a tech company in the institutional rankings of categorizing the stock. I mean, it's seen as a financial. Usually financials don't get into the NASDAQ. The NASDAQ's very heavy on like Google, Amazon, Facebook, right? Like those types of tech companies. If Robinhood were to get into the NASDAQ, it would be crazy. And that blows away all the estimates. I'm not expecting that end of year, but if that does happen, then yeah. I mean, this thing gets rated again. So it's not allowed to be in there. See, that's what I've heard as well. I don't think they're allowed. I got to do more research on what companies the NASDAQ lets in. Let me list of NASDAQ 100 companies, because obviously with the operating margins that Hood has, you would think it's easily available to be in the NASDAQ 100, but I don't know if it's a guarantee that they are able to get there if they're qualified as a financial. So these are the companies: Arm, Shopify. Look, bro, Kraft Heinz is okay. Never mind. Like, come on, bro. Why is Kraft Heinz? This is on CNBC. Either they got it wrong or there is no way Kraft Heinz is in the NASDAQ 100. Are you kidding me? What? Ross Stores is in the NASDAQ 100? Nah, bro. Like this. This is definitely, is Kraft Heinz in the NASDAQ 100? What are we talking? Okay, then I think all bets are off the table, bro. Kraft Heinz is definitely not a tech company. So let me see if I can confirm that. If that is true, bro, yeah, they should be able to have a chance to get it. But the point is, this is pretty damn incredible. I don't know where the trajectory of this goes. I have not bought ever since 124. I'm not the most comfortable, I'm going to be honest, buying at these levels. I'm really not. And I know I'm the like buying to strength guy, but at this point, I'm kind of like, all right, I'm tapped out. Like I don't know if buying here is the most optimal buy in the short term. Like 5-10 years from now, I think Robinhood will be much higher than these current levels, simply because I think they're going to grow. But in the next 3 months, I don't know. Yeah, Kraft is in. Confirmed. Kraft is in. As of August 10, 2025, Kraft Heinz was included in the NASDAQ 100. So it would not surprise me if maybe Robinhood is able to get their way into the S&P or into the NASDAQ, which would be quite exciting. All right, so that's what we got. Hoodie, we got a couple other headlines. Let me see if I can. Oh, wow. AppLovin CEO is live. This guy barely does any interviews. Huh. This guy's live on TBPN. Let's transition over to this a little bit, see what he's saying. His stock is up 7% today, $230 billion company. And then we'll keep going from there. Also, we'll listen to the Claude chief product officer that was on a podcast today talking about their new momentum. Rocket Lab's moving after hours. Okay, hold on. Rocket Lab. Dude, this stock every other day goes up 4 to 5%. Is there news on Rocket Lab? Kraft Heinz building 10,000 chip black hole data center in Texas. Yeah, exactly. That's why they got in. What's the news on Rocket Lab? What do we got? Lab of Rockets. What are they doing? Rocket Lab announces another 10 launch deal, boosting contracted missions to 21 Electron launches. Following the first launch agreement announced in June 2024, the second multi-launch contract within 18 months further solidifies Electron's international expansion and leadership of the small lift launch market globally. Rocket Lab and Synspective strike a deal for an additional 21 Electron launches. There you go. That is the headline. I don't know much about Synspective. Today's the first time I'm hearing about this, but I guess they are a partner with Rocket Lab. They provide data and remote monitoring services to government agencies and companies worldwide. All right, so a satellite data company, obviously that makes sense, working with Rocket Lab. This will happen in New Zealand. The next 21 launch sites will take place from the same launch site, with Rocket Lab's tailored launch service and streamlined operations central to Synspective's decision to extend its previous multi-launch contract. So it looks like it's an extension on a previous contract with Rocket Lab, and that's getting some momentum. ASTS, are we moving after hours? ASTS is actually flat. Red wire, that's up a little bit. Rocket Lab is green. Neutron, from my understanding, next year is the big year for Neutron. More of the Rocket Lab bears think it's not going to happen until 2027, and there's a chance it doesn't, but I think Sir Peter Beck's been pretty transparent about the fact that they're trying their hardest to make sure latest end of 2026 that ends up becoming a reality. I think probably it's going to be, way earlier than the end of next year, and that would be very exciting. All right, there you go. Rocket Lab getting some momentum. Nike earnings is tomorrow. It's not today. Nike earnings is tomorrow. We'll cover it live tomorrow, but it is not today. Okay, let's go to that AppLovin CEO and see what he has to say.
So now we wanted to give advertisers the opportunity to market themselves, but do it on a revenue-based pricing model so that they can come in and say, look, I want to generate $1,000 of revenue by day 30, be able to get me $1,000 of media spend against that so I can break even, make a profit. I'll scale unlimited if I can do that. And I've been in ads for 20 years. I hated the construct of selling someone to convince them to run advertising. Mm-hmm. You don't know what works, what doesn't. You try to convince them an audience was there. It's all a bunch of make-believe until you go to top of funnel revenue-based pricing. And so we ended up working with a lot of game developers. These are companies all over the world, a lot of smaller indie businesses. And when you're working with a customer where the CEO is the founder and they're on the front lines of marketing, it's a great dynamic because usually they're technical. They want to actually understand the math around marketing. And so
So this is the first interview that the AppLovin CEO has done. And by the way, it makes sense for him to do that. By the way, Firefly Aerospace, that's down about 7% after hours. Trade Desk was up 6%. The reason Trade Desk was up 6% is because they upgraded some of their, let me get the exact headline, but I believe they upgraded some of their legacy technology around advertising. And that actually got the street to be excited. By the way, Peter Beck right here, here's his comment. Thanks to Synspective for entrusting us with 21 launches, one of the industry's biggest bulk buys for Rocket Lab. Again, the AppLovin guy does not do a lot of interviews, so it's timely on a day like today with TTD getting a bit of an upgrade as well. And advertising sector so far, I mean, I know for TTD it sucked, but Google and Meta have been crushing it. AppLovin's obviously been doing amazing. Maybe that continues to help the advertising companies. Trade Desk up 6%. They upgraded its data marketplace, removing the high cost and complexity that kept advertisers away from using third-party data at scale. Looks like that is the reason why we got to move on Trade Desk. And then AppLovin, obviously, it was because of S&P 500. BMNR, that's up a bit after hours, up about... Okay, you guys are saying BMNR is running. Guys, it's up 0.5% after hours. I wouldn't say that's necessarily running. That's good. I wouldn't say it's running. I know we're all excited about BMNR, but up 0.5%. Why are you guys saying BMNR is running, bro? Am I crazy? Or is it like, no, it's not running. Like, I'm excited for it too. I own a ton of it, but it's not running after hours. It's barely jogging, bro. Like, what are we? We're definitely abusing that term right here. JD Vance is live. Why is he live? Hold on. Let me pull over to him. All right. Oh, I think they're talking about government shutdown. All right, let's go to this. Let's see what they're saying. Here we go.
The people's government and all the essential services that come along with it. If you look at what Chuck Schumer has said in the past consistently, it's whatever our disagreements are, let's negotiate with them. Let's talk about them. Let's figure out a bipartisan solution, but you don't shut the government down. In other words, you don't put a gun to the American people's head and say, unless you do exactly what Senate and House Democrats want you to do, we're going to shut down your government. That's exactly what they're proposing out there. Now, we have to remember, they're very frustrated. They say that they're very frustrated about the fact that this negotiation has not taken place until today. But if you look at the original thing they did with this negotiation, it was a $1.5 trillion spending package, basically saying to the American people, we want to give massive amounts of money, hundreds of billions of dollars to illegal aliens for their health care, while Americans are struggling to pay their health care bills. That was their initial foray into this negotiation. We thought it was absurd. We told them it was absurd, and now they come in here saying that if you don't give us everything that we want, we're going to shut down the government. We think that's preposterous. We think it's totally unacceptable, and we think the American people are going to suffer because these guys won't do the right thing. Now, I want to make one final point here. You will hear a lot from Senate Democrats, from House Democrats about the fact that American healthcare policy is broken. Well, we know that American healthcare policy is broken. We've been trying to fix it for the 8 months that we've been in office, but every single thing that they accuse about being broken about American healthcare is policy the Democrats have supported for the past decade. So if they want to talk about how to fix American healthcare policy, let's do it. The Speaker would love to do it. The Senate Majority Leader would love to do it. Let's work on it together. But let's do it in the context of an open government that's providing essential services to the American people. That's all that we're proposing to do. And the fact that they refuse to do that shows how unreasonable their position is. I think we're headed to a shutdown because the Democrats won't do the right thing. I hope they change their mind, but we're going to see.
Whoa. JD Vance, VP, says, I think we're headed to a shutdown because the Democrats won't do the right thing. I believe Chuck Schumer is there with them, by the way, along with Mike Johnson. So, I mean, again, they might be posturing, and at the 11th hour, they'll come up with a deal. But it looks like that might be the stance right now.
I'll let the Speaker say a few words.
Thank you, Vice President Vance. I want to thank the President as well. They showed strong leadership today. They invited the 4 leaders over here because the President is operating in good faith, and he demonstrated that very well. The problem is that Chuck Schumer and Leader Jeffries refuse to acknowledge the simple facts. Let's review what the simple facts are. As the Vice President was saying, this is the common sense thing to do. This is the right thing to do. This is the simple thing to do. By way of review, the House is getting back to the way the regular appropriations process is supposed to work. 12 separate appropriations bills passed through the House Appropriations Committee, 3 off the floor. The Senate doing their work as well. All this in bipartisan fashion, by the way. They passed 3 bills in the Senate. Those bills don't match up exactly. So for the first time in years, since 2019, You have a conference committee that is being constituted between the House and the Senate. This is the way a bill becomes a law. They work out the differences. All this is happening in bipartisan fashion. The problem is we've run out of clock. September 30th is the end of the fiscal year, so we need a little more time. So what we did in the Republican majority is the right, responsible, simple thing. A clean, continuing resolution, a short-term, nonpartisan continuing resolution. It's only 24 pages in length. Leader Thune has a copy if you want to see the exhibit. There's nothing partisan in here. No policy writers, none of our big party preferences, because we want to do the right thing by the American people and allow more time for negotiation. Now, there's a reason that Chuck Schumer and Hakeem Jeffries have come out here, stomped the feet, saying that they can't go along with this. They're trying to bring in extraneous issues. They issued a counter proposal. You should go take a look at what they requested. $1.5 trillion in new spending that is unrelated to the ongoing appropriations process. They wanted to, as you said, restore taxpayer-funded benefits, okay? Hardworking taxpayers in America, they want to take your funds and give that for benefits to illegal aliens. They want to restore that because we got rid of it. They want to prop up left-leaning media outlets. $500 million they threw in on top of that. $1.5 trillion on a 7-week stopgap funding measure. We're not going to do that. They know we can't do that. And we never have in the past. During the Biden administration, there were 13 threatened shutdowns. The Republicans in the minority did the right thing. We kept the government open. We're simply asking for the Democrats.
This is what Schumer said a couple minutes before Vance spoke.
By the way, he looked, I think he heard about them for the first time. The closing of rural hospitals. The fact that so many clinics are closing. And I don't know if he knew this before, but the fact that people will pay $4,000 more a year, $400 more a month, close to $5,000 more a year on their health care premiums if we don't do anything. And people don't know what to do. The average working family can't afford that. I told him how I met a mother who was crying to me because her daughter had cancer. And what has happened with health care, with what they have done, she's going to watch her daughter suffer and maybe die. And so he seemed to, for the first time, understand the magnitude of this crisis. And we hope he'll talk to the Republican leaders and tell them we need bipartisan input on health care, on rescissions into their bill.
Do the same. Again, I want to thank President Trump for the strong, solid leadership. He listened to the arguments, and they just wouldn't acknowledge the simple facts. I want to thank Vice President here for showing his leadership.
All right, so this looks like it's going to go back and forth. S&P, you do have after hours a bit of a red candle. Nothing crazy, 663.70 to 662.90 right now. I don't know. I mean, both sides look serious about their political agendas being executed. Now, again, as Johnson said, 13 times over the past 4 years, there was a threatened shutdown and it never ended up happening. So this will be the first time in a couple of years that we actually do get a legit shutdown if it does happen. It looks like Vance and Johnson definitely differ from Schumer and Jeffries, and those are the leaders of the Democratic caucus along with the Republican leaders. And so, I mean, if they can't come to a conclusion on this, there's a world where we see a shutdown. In terms of what happens from here, I think it's a buy the dip. I mean, I know it's so basic to say that, but like it is. Like government shutdowns are always a buy the dip. And no Democrat or Republican wants the government to be shut down for an extended amount of time. Like I just don't think any of them actually would like to have it be shut down for anywhere near a week, maybe max 2 weeks, which even that would be the longest shutdown we've had in a long time. So I don't think that's going to be placed. Let's actually ask Google, when was the last government shutdown and for how long? It was back in 2018. Oh, I remember that. That's when Trump was president. 2018. Wow, 35 days. That was actually a month. And then before that, it was 2013 when Obama was president. 2018, 2019. 35 days. I did not keep up with the markets as much because I was a junior in college, but I do remember the government being shut down there. Well, okay, so that actually, I mean, look, if Trump let the government get shut down for 35 days, oh, that's probably when him and Nancy and Schumer were arguing in the Oval Office, right? Everyone remembers that in 2018. when they were going back and forth publicly with the media. I mean, if Trump's willing to go a month for a shutdown, I don't think he wants to deal with that again. But I mean, if he did it once before, who knows? It would just be very aggressive. Yeah, that's correct. That was in December of 2018. There was not only a trade war going on, that is also why we had an ugly market towards the end of the year in Q4, likely because of the shutdown. Yeah, that was the first time I saw two political leaders arguing so aggressively with each other in front of the media. That was Nancy, Chuck, and Trump in the Oval Office going at it. I mean, who knows, man? Maybe we get a situation like that again, but I guess we'll see in the next 3 days. I think by Wednesday nights, or no, by tomorrow night. Tomorrow's the deadline. So by tomorrow night / morning, we should figure out what happens. Can we just let AI govern us by now? Dude, I mean, might as well. Might as well. AI probably would be better than human beings at this point when it comes to governing us. So there you go. We're going to see. We'll keep updated on it over the next couple of days, but as of now, they still have 24 hours to come to a conclusion. Okay, what other headlines do we have? I definitely want to talk about Claude because that was important. Now, Kalshi. Oh, no, this is actually very important. The BLS, we talked about this in the morning, said it will not give us the jobs data on Friday. Kalshi is having a 74% chance that the government shuts down on Wednesday. So prediction markets are saying we're definitely going to get a shutdown. I mean, 74% is way higher than where it was 2 weeks ago at 56%. So not definitive, but there is a higher chance. And then, I mean, if we don't get jobs data on Friday, because the BLS, the Bureau of Labor Statistics, is part of the government at the end of the day, that's not going to be good. I mean, I can't see a world in which that's, I mean, maybe it's good because the jobs data was going to be bad. But like in general, I think the markets, the number one thing they hate is not having information and being left in the dark, uncertainty. If that continues to happen on Friday, we're going to have to see how this ends up playing out. But that is something we're definitely going to have to keep an eye on right here. So there you go. S&P 500 recovering a little bit after hours at 663. Also, yes, the threat of Trump saying that he's going to fire a bunch of government employees. I mean, is he just saying that or is that real? That is also something that we're going to have to see. By the way, Tannor just sent me this picture, which goes back to the conversation of Hood in the NASDAQ. This is the sector breakdown of the NASDAQ. You have materials, real estate, utilities, industrials, consumer staples, healthcare, discretionary, communication services, and then IT, information technology. IT, as you can see, is 57% of the NASDAQ. Robinhood is none of those companies. Robinhood is a financial. That's what it's categorized as. So that could be part of the reason it's not the easiest for them to get into the NASDAQ. Now, I think of them as a tech company. You guys probably think of them as a tech company, like legally, because of FINRA, SEC, all the regulations. I don't know if they're able to be qualified as a pure tech company, like an IT company, which means that could be a barrier for them ultimately getting into the S&P 500. Or not S&P, but NASDAQ. But if they put freaking Kraft Heinz in there, you would think Robinhood deserves to get there. Amit, is it a stupid idea to do a cash card put for BMNR for January 2027, strike price 55, and collect some juicy premium? Well, if you do that, you have to make sure that BMNR is not jogging above 55 in January 2027. It actually has to run above 55. That's number one. Number two is, no, I don't hate that idea. I mean, look, selling an in the money or out of the money cash secured put and collecting the premium is not the worst idea. The question is, how confident are you that BMNR actually gets above those levels? I've done that with Hood before and it's worked out. Obviously, you don't own the shares, so you can't necessarily navigate the position if it really goes against you outside of just rolling the put into the future. But no, I don't think that's a crazy idea. 55, I do think personally it'll be above that. So yeah, not a crazy idea, but you might also just want to consider buying some shares if you think if it'll be well over 55 based on the premium you're getting. Buying the shares themselves might end up doing better for you long term. So that's what we got there for BMNR. Okay, so let's get into this Claude discussion because this was definitely taking over the headlines today. This is Claude Sonnet 4.5, latest AI model. And then we'll hear from some of the people in Claude as well, along with this OpenAI Shopify partnership today.
tasks without constant human input. These autonomous assistants are the latest front in the AI model race, with OpenAI just this hour announcing that it's switching on instant checkout in ChatGPT so that users can buy directly in chat from Etsy and soon from Shopify. The move that's powered by its own agent tech have sent shares of Etsy and Shopify higher. Now, Instagram co-founder Mike Krieger, now Anthropic's chief product officer, told me that this latest model is opening the door for businesses to build products that simply weren't possible a few months ago.
We hear from companies all the time that their product or their idea was not possible 3 months ago, 6 months ago with the previous models, but then something happens where the model evolves to the point where all of a sudden it's now possible. The frontier is still moving and the gains are still significant.
And the launch comes as the AI model race hits an inflection point. There's been this growing debate over whether innovation is slowing, with new releases feeling more incremental, less revelatory. Krieger pushed back on that, saying that rumors of a slowdown are greatly exaggerated. He also said their models are getting cheaper. This one is 1/5 the price of its model released last month. And speaking of price, that is where rivals like DeepSeek are pushing ahead. As part of a new model announcement this morning, the Chinese AI giant said that it's cutting the price of its software tools in half. Guys?
Mackenzie, where does most of the cost savings come from? What is that driven?
Okay, so this is actually really important. I did see the headline in the morning. I forgot to talk about it, but a bunch of APIs from DeepSeek were cut by 50% this morning in terms of costs to the people that are paying for those APIs, which is actually really bullish for the Chinese tech companies that want something like a model that is in the United States, but they don't want to pay for the prices that those models are charging. Now, Anthropic, again, releasing this stuff based on the chart that we looked at about an hour ago. It's a really good model. And if this model continues to be as strong as how Anthropic says it is, then it's likely going to continue to get market share. And the argument that the perceptual increase around these LLMs is slowing down, I think is a legitimate argument, especially because we haven't seen anything monumental over the past, I would say, couple months in terms of what these models can do. But then you get something like this. As Toby, CEO of Shopify, says, Shopify merchants will be able to sell directly into ChatGPT. We've been working with OpenAI for quite some time so people can search and buy products inside of your chatbot. And it's something we've had a hard time keeping quiet about. Rollout is coming very, very soon. This is kind of what it looks like right here. As you see on the screen, I'm looking for lightweight trail running shirts that stay cool. Can you help? And then boom, it gives you the products. You can buy it right there through ChatGPT. And it's done. And I would imagine all the credit card data, the address, all that stuff is known via your chatbot, whether it's Gemini, ChatGPT, whatever it is, right? They have access to all that data. And so you don't need to go through the annoying part of like typing in your credit card number. Like all that stuff is automated for you. And eventually in the future, it should get even easier than asking for a t-shirt. It should just find you the right t-shirt based on the AI knowing you so well. But those are the updates for the models that I personally am looking for to get more evidence that these models are getting better and better and better. And obviously, I think all of us are looking for Apple and Google and the really big hyperscalers to make personal assistants for all of us so that we use them on a daily basis, because that will be like the next evolution where AI touches, our day-to-day lives. So we got to see. We got to see if that plays out. Shout out to Mr. TJ, the premium king, checking in. TJ, we were just talking about someone selling some cash secured puts on BMNR. The only reason I know how to sell a put, by the way, is because of this man, Mr. TJ, the wheel deal right here. So shout out to TJ. He has been absolutely crushing it, managing his basically mini hedge fund right through his phone. And TJ, I don't know how much you manage anymore, but I think it's closing in on like 18-20 million bucks that TJ is managing. And he's doing a lot of straddles on Hood, SoFi, BMNR, all these different things. And he is basically the reason why I even got into option selling. So for those that don't follow him on Twitter, definitely you can follow him right there. I remember the first time he told me, dude, TJ probably remembers this moment. The first time he told me that you can sell a put and collateralize your capital without having to pay interest on it, I was just like, what? So like you can borrow money from a brokerage and sell a put on SoFi for $2,700 for a $27 strike. And because you're not actually using the $2,700, it's just collateralized. You're technically not paying margin. Because you're not borrowing the money. You're just collateralizing it. Now, if you get assigned on it, then you have to pay margin. If you buy stock and sell covered calls, obviously on margin, then you would have to pay interest as well. But you're not paying margin interest on borrowed money when you collateralize a cash card put. I mean, that was crazy when I found out about that, because you know, if you have access to capital, it really does benefit if you sell some really conservative puts without having to pay margin interest on that. It's not the craziest way to generate a little bit of more side income. Obviously, if you get assigned, you have to be able to navigate that situation. You have to have the bankroll to be able to deal with it. But if you don't, it is very, very, very effective, which makes sense. So shout out to Mr. TJ right here. I use Copilot. It's the least talked about, but it's the closest to Perplexity Pro, in my opinion. I use both. Yeah, I mean, here's a little bit more of the Anthropic chief product officer talking about their progress. It just doesn't seem like it's slowing down. And from a software engineer's perspective, my cousin, software engineer in California, I've talked to her a lot about Anthropic. She thinks it's the best game in town. And she literally has a certain number of credits that she's even allowed to use at her company because the outputs are so good, which means the inputs cost a lot of tokens to generate. But it's a game changer for her organization. And, you know, it likely means they're going to be buying a lot more credits in the future.
Like, yes, come on. Then it's probably, you know, being too lazy. And so we're trying to tune it for this one, which is like the right blend of eagerness and laziness and make it as steerable as possible. So that's a big one.
Yeah. What about on the compute infrastructure side, the actual being able to keep up with demand? Is there any messaging that you're sharing around what this particular model means just for like speed, availability, reliability? Because it seems like there's so many businesses that are just like, it's good enough for my use case, but I need a lot of it.
Yeah, no, for sure. We think a lot about capacity and infra. And for us, it was really big to be able to deliver something that was more powerful than Opus for a fifth of the cost. And you can imagine that's like, you know, we think a lot about where we're serving and what we can serve at that scale. So having our best model also be the kind of sweet spot middle child is really, really big for us to be able to scale up to capacity. I think earlier this year, a lot of the conversations I have with customers, like, how do I get more Sonnet? Like, I'm at capacity. And we're finally getting to the point now where we can meet that demand.
Again, another CEO that says we are compute constrained. We're trying to keep up with the demand. I really do think 2026, these data center plays are something that have to be taken a lot more seriously because it doesn't look like they easily want to slow down if there's this much lack of compute capacity. And I think that's what Belsky from BMO, which we'll finish up with him right here, he pretty much said as well. It's like, if that much constraint is needed and all these companies are eager to buy more, it's not just a semiconductor trade, it's an entire market trade, aka that's why they raised their S&P 500 target, because every single company is going to have margin enhancement, every single company is going to have more opportunities, and all those opportunities manifest into better earnings.
Inflation's higher than target. Can that be Goldilocks?
Well, inflation, I think.
Stagflation is a word that's tossed around. Is that Goldilocks?
It's an excellent point. And I think of the one thing that we need to be worried about is that if the Fed cranks interest rates down too fast, could that ultimately be something that would feed inflation? Remember a year ago when the Fed started cutting, 10-year Treasury went up, yields went up.
Oh, well, I have news for you. The long end of the curve has been up since the Fed started cutting this year.
Yeah,
just
so
now.
We actually think the yield curve is going to continue to steepen, and that'll be good for financials, and that's where a lot of the earnings growth is going to come out. But also, ultimately, that will help drive participation to broaden into small cap, into value, and the like. I think it's going to be, right now, I'm not going to give away my forecast for 2026 so far, but I think it's going to be really difficult.
Well, you kind of already did.
No, I didn't. I think that Goldilocks in a consistent kind of more normalcy type pattern, Scott, doesn't mean up 20 to 25%. I think it's very, very possible that we're going to enter into a period where stocks are up high single digit to low double digit, especially with the dividend. So let's call it near the historical average of 10 to 12%.
High single digit, but if you include the total return and all of that, you're better than that. But why only single digits?
Well, I think
if the environment's so great.
No, I think you have to underpromise and overdeliver, and I think the market has to prove itself. The Fed has to prove itself in terms of how they're going to engineer this in the turn with respect to the dual mandate, and we'll see from here. But ultimately, especially when we're taking a look at the consensus numbers that we see from economists, but also our great economics team at BMO, interest rates are going to tighten in. So that's why we think what we think in terms of where we're going to go.
All right, hold your thought for just a minute. We go.
So again, kind of the core argument from them is labor market and inflation are the macro risks to 2026, which I think everyone can agree with. By the way, I mean, based on what Vance said, if the government is shutting down, we are not going to get labor market data on Friday. So that is definitely a risk for the market to kind of consider. But if corporate earnings aren't the risk, and it's more so around labor market and inflation. If those end up not being as bad as we think in 2026 and earnings continue to outperform, maybe that continues. And maybe that really does allow the market to gain more momentum. So there you go. Ag is asking, Amit, I have out of the money calls on BM&R expiring this Friday. Can you explain why they went down by 40% despite BM&R going up by 5.3%? So the reason is usually about your strike price, right? So you have a $60 strike, or you have 55, 56, 57.5, 60. All of these are well above 52 or whatever Bitmine's at right now, 53.06. The problem is your expiration and your strike. If your strike was at like 50, you'd be in a totally different scenario, right? Because you're in the money. To go from 53 to 60, you got to have a move on the stock. And you only have 4 days to have that move. So one of the hardest parts about buying short-term dated calls is if the stock does not move up or down, whether it's a put or call, in the direction that you need it to move, like it has to be above that level, usually that the strike price plus your premium, right? So if you paid $1 for that call, it has to be at 61, not just 60, to even break even, and it doesn't make that move, then the theta decay on those call options immediately starts setting in. This is why I like leaps, because for leaps, you have a lot of time for the thesis to play out. This is why Chris as well, who really got me into understanding the psychology behind leaps, also likes it, because you have time for your thesis to play out. Now, if Bitmine shoots up in the next couple of days, you can make crazy returns, right? 1,000%, 2,000%, like all these crazy Wall Street bets types of returns. But the question is the probability on that. And the probability is low, right? Now, I know on Wall Street bets, it seems like it happens every day, but for every one of those posts, you have like a million posts that go to zero, a million options that expire worthless. Whereas if you're betting on Bitmine $70 by 2027, I mean, you're not going to make like 3,000, 4,000%, but the odds of it being above that level in a year and a half, is way more likely than being at 60 in 4 days. Yeah, your IV may also collapse as well based on whatever, the government shuts down tomorrow and everything takes a hit. Boom, Bitmine takes a hit just based off nothing that has to even do with Bitmine. And, that could end up ruining the calls as well. So, yeah, that theta, I really am not a champion of short-term. I mean, I was in this situation, but let me see if I can find the tweet. I bought short-term calls on Tesla back in 2023. And it was right before, it was literally like 3 minutes before their earnings. And Tesla gapped up by like 15%. And I was like, boom, baby. I am that guy. And then I found out what IV crush is and what theta decay is, because Tesla went up, but it didn't go up enough for me to really benefit from those out of the money calls. It has to go way above your strike price plus your premium. And it didn't get there because then it sold off the next day. So those calls went to zero. Which is why selling the premium, selling the covered call, selling the put is a bit more effective most of the time than buying it. But you're not going to make, massive returns on selling it. But even, an extra 1% a month, 2% a month, 1.5% a month is, it definitely compounds in a portfolio. So that's what we got there. Yeah, it is a very strange game. I mean, because you have a lot of different market dynamics and variables playing out. But if your strike is that far away and, you're now look, if Bitmine gets 65 on Thursday, your calls are going to be up like crazy. And sometimes that stuff happens. I mean, ask the Intel people that had calls 2 weeks ago, or the EA Sports people that had calls on Friday. By the way, speaking of people that might know something before it happens, we do have some updates on the politicians. And this Marjorie Taylor Greene lady is really becoming an investor in the public market. So on September 11th, she bought 150,000 of Adobe, Google, DUK, which I don't know what that is, Morgan Stanley, and then CrowdStrike. DUK, what is DUK? Duke Energy Corp. So she bought an energy name, software, Morgan Stanley financials, and then CrowdStrike. I mean, she is starting to become a pretty aggressive buyer of stock. She also bought Palantir at 70 back in January. So she's been buying more. And then you had this guy, Representative Michael McCall, revealed 70 different transactions that happened in 2024. He forgot, quote unquote, to disclose $8 million worth of those investments. Today was the day he disclosed it. His fine for breaking the law of having to disclose at least 45 days after you buy a stock, if you are a public representative, is $200. So look, I don't think we need to make it illegal for politicians to trade. I just think we have to stop this shit. Like this idea that you don't have to disclose and you get a $200 fine is absolutely nonsense. It obviously incentivizes people to not disclose if they're only going to get hit with $200 of a fine. But yeah, that's not, I think, the best way to get the politicians to show their trades. Again, the reason I'm not against them trading is because I want to know what they're trading. I just want them to disclose it within a day of them making the trade. That's what I care about. I know some people morally feel like they shouldn't be allowed to trade. Like I could care less about that. I don't care if they trade. I just want to know what the trade is. That's it. I just want to know. And as long as they tell us, I don't really care what they do. But they don't tell us. And then if they don't tell us, they get a $200 fine. That to me is the issue. That is the problem. And hopefully that changes. But the idea that they're going to stop politicians from trading, dude, there's too much money in politics for that law to become real. I know the Democrats and Republicans are aligned on it, and you got what's that guy's name? Josh Hawley, who's into it, AOC, who's into it. I don't think you're going to get enough support because a lot of these politicians want to make money. And I'm like, all right, cool. I'd like, go ahead. Just tell us what you're doing so we can make it with you. That's all we're asking. It's all we're asking. And hopefully we're going to see if that ends up playing out. Do you think politicians should be able to trade on insider information? Of course not. Do I think that it's actually not going to happen? No, because I'm a pragmatic realist at the end of the day. Like, do I think anyone should be able to trade on insider? Of course not. I think that's a horrible thing. And they should go to jail if you do that. But the idea that this country that has had politicians do this for the past 100 years would somehow make it illegal to do it, I mean, I just find that hard to believe. I'm skeptical and pragmatic when I think it's time to be skeptical and pragmatic versus being someone who wants to virtue signal around the reality of what's going to happen. And the reality is it's likely not going to be illegal. So, okay, if you're going to trade on inside information, just let everybody know. Make it a level playing field at the end of it. Like if that's how it's going to play out, everyone should, I mean, that's the most pragmatic way for this to play out. This 45 delay thing is stupid. This $200 fine thing is stupid, but banning it, I just don't have enough faith that we would actually ban it. It's hard to me imagine for that to play out. And see, people don't want to say that. People don't want to say that because like, oh, they feel like bad for saying that. I'm like, no, but you have to be practical. Like we have to be real. The idea that like, of course they're going to be, this is illegal morally. It's like, what good what good is it if I say this is so immoral? Okay, cool. It's immoral. Like, what do we do about it? Oh, well, we're not going to ban it. Okay, so the immorality of it's going to continue to happen. So how can we make it a little bit less immoral? Everyone has access to the information. That to me is the solution, or at least one way to think of the solution. But it's unlikely that it ends up playing out. Vance, I think, is taking some questions. Let me get back to him right here. Let's see if he can give us some more data on what's happening with this shutdown.
And you mentioned you believe that we are headed toward a government shutdown. Is the federal government preparing to fire federal workers if the government does shut down?
Well, first of all, we have to keep essential services functioning as well as possible if the Democrats shut down the government, and Russ has been tasked with making sure that's possible. Now, you asked about negotiations. One of the things I admired about the president, but frankly the entire team's approach during the conversation we just had with Chuck Schumer and Hakeem Jeffries was, they have some crazy ideas. Giving taxpayer money to illegal aliens for healthcare, that's a crazy idea. Funding transgender surgeries in Peru, that's a crazy idea. But they had some ideas that I actually thought were reasonable. And they had some ideas that the president thought was reasonable. What's not reasonable is to hold those ideas as leverage and to shut down the government unless we give you everything that you want. There were multiple times where Leader Jeffries or Leader Schumer would say, you know what, we should be doing this. And the president of the United States would say, yeah, absolutely. Let's have that conversation. But we're going to do it in the context of the people's government being open. We're not going to let you take the people's government hostage and then give you everything that you want. And that's really the state of the negotiation. Yeah, let's have a conversation. Let's have a negotiation. But we're not going to shut down the government because we won't give the Democrats everything that they want. Caitlin.
Can you respond to what Senator Schumer said, that there were aspects about healthcare and things for certain people that the president was learning about for the first time in that meeting? And was the president open to a deal on the ACA subsidies?
Well, I'm highly skeptical that the president was learning about it for the first time, thanks to Chuck Schumer. But what I will say is, look, We have put a $50 billion rural hospital fund into the big, beautiful bill that we passed a few months ago, because we know that under Biden administration's policies, there are a lot of small town hospitals, a lot of rural healthcare that was getting shut down and that was struggling. We're trying to fix that problem. In fact, we're happy to work with Democrats to fix that problem. We want to work across the aisle to make sure that people have access to good healthcare. We are not going to let Democrats shut down the government, take a hostage unless we give them everything that they want. That's not how the people's government has ever worked. That's certainly not how it's going to work under the Trump administration.
This is very important on health care. Their counterproposal, what Chuck Schumer and Hakeem Jeffries are demanding, is that they claw back the $50 billion that we put into the rural hospital support structure. They want to take that back. We're not going to do that. We passed that because we have to allow for that. Also, if they shut the government down, not only are troops unpaid, federal workers, and all the services that everybody relies upon, but the WIC program, the nutrition program, women, infant, and children, they will not get that program, will not be funded. FEMA won't be funded. We have hurricanes off the coast of the United States right now. This is serious business. You have telehealth, you have mental health services, all that's funded by the government would stop if Chuck Schumer and Hakeem Jeffries and the Democrats have their way. The Democrat shutdown would be damaging for the country. We can't allow for it.
Yeah. Thank you all.
There you go. As Austin says in the chat, let the finger pointing begin. Dude, I hope this is not the freaking October bear case. I really hope a shutdown is not the bear case. I mean, that would be so annoying. To be honest, though, it actually, like, as annoying as it would be the easiest dip buy. Because we know eventually, if the market actually tanks 3-4% on the S&P, individual stocks 10-15% because of a shutdown, like, we know the government's not going to be shut down forever. That should be a self-inflicted wound that's easily repaired. It shouldn't be the hardest dip to buy. But we're going to have to see if that dip ends up happening. We got a headline from YouTube. Is this true? Oh, yeah, this is true. YouTube to pay $24.5 million. I got the Wall Street Journal notification just now as well, to settle lawsuit bought by Trump. 25 million, 24.5. This is in relationship to Google suspending Trump's YouTube channel after January 6th. 25 million will be going to a fund for Trump's presidential library. Wow. Okay, so there you go. That it is a little bit of a parking ticket for Google. I mean, 25 million, dude. How much does Google make a day? What's Google's revenue? It was like 85 billion last quarter, right? I mean, this is not even, they make 94 million a day, roundabout. This is 1/5 of the amount of revenue Google brings in a day. All right. X, by the way, also paid 10 million because they shut them down. I don't know if Meta paid anything, but Meta shut them down as well. So also, Nelk did a podcast with Trump. Nelk Boys, they're like a popular Canadian podcast. Back in 24, when Trump was saying like the election was rigged and that got removed, that just got back on YouTube. So it's kind of wild because Google, I mean, what choice do they have, right? Like, he's the president. They're not going to get into a fight with the president. And so as a result, they kind of have to bring back everything that they got rid of a couple years ago, including paying 25 million. Okay, so I did see this headline by Robin as well. A couple of people texted me about this. So someone tagged Vlad in potentially a discriminatory issue that Robin had dealt with. I don't know how true this is, and I don't think Vlad knows this either, but someone said Robin should be investigated for confirmed discrimination against conservative Americans. This is Blind, which is like a website where tech workers post their experiences. And the reason it's called Blind is because it's all anonymous. And someone said that Robinhood basically discriminates against people who are pro-Trump or MAGA. And Vlad said, this is not acceptable. We don't discriminate in our hiring, looking into this, and we'll take immediate action if true. So obviously that's a great thing for Vlad to say. In any form of discrimination, they would respond to it. I don't know if that's true, dude. Vlad has been to the White House a bunch of times. I mean, he's met Trump. You could tell, I mean, he donated, or I should say Robinhood donated 2 million, which is more than $1 million that Zuckerberg gave. I mean, like they have been pretty damn friendly with the Trump administration. I don't know if that necessarily means they're anti-MAGA, but that is one thing that that Vlad had to deal with today. On a more happy note, my gold card showed up today in the mail. Yeah, I think a lot more people are getting gold cards, which is good because that should be the precursor to banking. Matthew, thank you for becoming a channel member. Appreciate you being here. Comedy, thank you for the super chat. Hood is a banking brokerage and now a gambling app, but Kraft Heinz has some very advanced tech to produce beans and ketchup. Unfair comparison. That's true. It is an unfair comparison. Kraft Heinz's technology is a bit differentiated than Robinhood. And then Tahir, thank you for becoming a channel member as well. Appreciate you being here. John says, bro, my grandmother just got her gold card. Or you're saying your mom? I think you forgot the M. My mom just got her gold card. Yeah, my mom actually got it a couple weeks ago. So, and that's the only thing she uses now is the 3% card. So it's pretty addictive once you get it. It's just hard to ignore 3% on everything. Rango says, blind is nuts, extremely liberal. Wouldn't be surprised if that's just the state of things. Not to be confused with Vlad. California is just super commie and anti-MAGA. Also, there are a lot of posts on Blind and Glassdoor and stuff that are fake. So I think it's important to investigate. Is that like a real post, or is someone just pissed off at Robinhood for whatever reason because they got fired or something and they then started writing that stuff? Which tends to happen more often. I mean, dude, I remember in 2022 when we were going through the Glassdoor Palantir reviews, the amount of people that like left Palantir in 22 and said it was the worst company in the world. Like if you invested based off those reviews, you would have never invested. So you really got to take them with a grain of salt because a lot of employees have their own political motives when they leave a company and, write crappy reviews. And that could be kind of what's playing out here as well. But we got 136, baby. We got one. All right, where was everybody today when it was breaking through? I mean, I know a lot of people were on the stream at 1:30, but dude, I was recording a podcast today. I was in the middle of doing a podcast with Hans. I've done a couple podcasts before with him and Farzad, and like he's asking me these questions, and I'm like looking at the stock, and it's ticking higher, and I'm like trying to focus on the questions, but I'm seeing the stock just keep moving. But ironically, he started asking me about what makes Robinhood so special. And one thing that I think is important to remember is that, like, he asked me, how did you invest in them, even with the whole GameStop AMC nonsense? And I was like, one, I wasn't affected by it. So, like, maybe if I lost a lot of life savings, it would have been different. But I just wasn't affected by it. But number two is, like, when I started buying the stock at 8, every comment on Twitter, at least like 95% of the comments, it wasn't like, wow, Robinhood's amazing, such a great opportunity. Like, there was only a couple people saying that. The majority of the comments were, this is the worst company in the world, most evil company in the world. I can't believe you're investing in the company that screwed over GameStop, AMC, etc. So that prompted me to like actually go down my own rabbit hole and try to figure out what the hell happened with GameStop and AMC. And look, at its core, yes, Robinhood messed up with the communication. But this was not necessarily their fault, bro. I will die on that hill. Schwab, Fidelity, all of them had to shut down the buy button because there was a liquidity issue with the clearinghouses. And maybe we need better infrastructure to deal with settlement, aka stablecoins, which actually might end up avoiding a potential GameStop situation again. But to blame Robinhood unilaterally as this was their fault is just like very short-sighted. And as a result, I was able to look past that and invest. And I think a lot of people were able, even people that were, dude, I know someone who has around about 15,000 shares of Hood. I met them at the Hood Summit, and they actually lost a decent chunk of money in the GameStop saga. And they were anti-Robinhood for a while. But then, when the stock was around 10, 12, they took another look at it and they were like, I can't hate this company simply because they made a mistake a while ago, especially when the fundamentals are this good. Again, it was trading at an 8 billion market cap, 6 billion was cash. So you're paying $2 billion for the business, which now the enterprise value of Robinhood is about $115 billion. And so I think you just had to look past the doubters. You also had to be able to look past the argument that UI wasn't a moat. This was another massive argument that people made during that time, right? UI can be copied. User experience is not a moat. Schwab can do it. Fidelity, they can't do shit, bro. Schwab and Fidelity have not been able to copy one iota of Robinhood's experience. And those companies are way bigger than Robinhood, have way more assets than Robinhood, have way more, way more users than Robinhood. So the ability for them to innovate theoretically should be easier. But then, you get to, it's a big company, thousands of employees. It's really hard to move fast. And so the moat argument that Robinhood had no moat, I mean, that argument, I thought the GameStop argument was better than that argument, because I was like, GameStop, maybe there is a way that the perception of it is so bad, people just never want to invest. The moat argument I always thought was stupid. I was like, dude, I'm using this every single day. Like, if I'm using it every day, then I'm not going to be going to some other product that tries to replicate the product experience. And you can copy the product experience, or you can copy the product, but it's very hard to copy the product experience. And that's why it was really easy to overlook like this moat conversation that so many people cared about back then. Vanguard's UI stuck in the 1990s. Dude, my grandfather, I told you guys, who trades options and like sells puts. I remember I was at his house a year ago around this time, September 2024, and we were looking at his account, and he pulled up Vanguard, and I was like, dude, what is this? I was like, what? But he's been using it for 30 years, right? So he understands it. But I was like, what? Even I was like, I don't know how to understand this product. Like, this is ridiculous. So it's just tough. It's tough for these new companies to be able to execute at the level of what Hood's doing. Jasmine says, I was working through a crazy Excel workbook. How many people use Excel every day? How many people are like deep in Excel every single day because of your job? Exercise Dude says, I was at the gym. Nathan says, I was stuck in traffic. Walter says, I was working. Rochelle says, I was working. Peter says, I was shaving. Comic Guy says, I was sleeping. All right, so most of us were just living our lives. His hood was going higher. Damn, a lot of you guys use Excel every day. A lot of you guys use Excel every day. I am not anywhere near as proficient as like probably a lot of you guys at Excel. I know a couple of formulas here and there, not enough where I'm super confident to like truly build out my own models. And I use a lot of templates from other people's models because it's just easier. But I took a couple Excel classes in college. Honestly, I probably didn't pay attention too much in those classes, but yeah, I'm not deep into an Excel, but I have a lot of respect for people that are, because it is complicated, bro. And when you can work through an Excel sheet and really navigate it, I mean, for finance people, it's like magic, because the numbers can start to really make sense. And so whenever I download these templates and I use them, just trying to model out my own stuff, especially for DCFs, it surprises me like how well some of these are constructed. Amir, he's a friend of the channel. Amir is like Mozart when he's working with Excel. I mean, that guy is just on top of it. But I'm not the deepest into that ecosystem. Our whole economy lives off Excel. I use Excel every day. Microsoft owns enterprise software for corporations. Dude, that is like the one thing about Microsoft, no matter how much people talk shit about them, is they own the enterprise software stack. And it doesn't look like that's going to ever slow down. Now, maybe AI kind of changes the way we think about the enterprise stack, but I think it's only going to accelerate the growth that companies like Microsoft had. Speaking of AI, here's Deepwater's Gene Munster. Here's his thoughts on the current state of the AI trade.
Big week that since GPT made its debut in November of 22, the Nasdaq's up 100%. Typically over that period, it'd be up like 25%. So this conversation is most appropriate. And the reason why these bubbles happen is outlandish behavior starts happening from investors. And this comment that I'm going to make may fall into that category for some people. Is that a few months ago, I thought we're in the third inning of the AI build out, the AI trade. Now I think we're in the second inning. And that's based on what we've heard from the big CapEx, the big spenders, hyperscalers after the June quarter. And also more recently from Zuckerberg and CFO Susan Liu at the Goldman conference, and from OpenAI, Oracle, NVIDIA, all that put together. Scott, I think there still is a massive amount of investment. I think that investment will lead to these valuations going higher. One other piece about the rhyming part.
Yeah,
No,
go ahead. Go ahead. Nope. Go ahead, Gene. You paused. I thought you were done. Please go ahead.
Right on. The rhyming part, one more on this rhyming part is, I think one piece that we're going to see is these companies that are so loved by the AI trade, the private companies, whether it's OpenAI, XAI, Anthropic, Anduril, none of these are public yet. None of them have seen this crazy public euphoria around it. And so at a very high level, it's hard for me to imagine that we're at the end if, in fact, we haven't seen some of these biggest companies have their breakout period in the public markets.
So you mentioned the NASDAQ up 100% since November of 22. We looked at some of the groups within the AI story. The hyperscalers, the Googles, the Metas. Meta's up 579% since November 30th of 2022 when GPT was announced. NVIDIA's up better than 1,000%. The so-called others of AI love. Dell's up 200%, Oracle 250, IBM is almost a double. The power companies that get a lot of love, utilities that are now modern day growth companies. Vistra 725%, GE Vernova up 355%. It's why Ken Griffin probably said what he did on CNBC last week. I want you to listen.
There's obviously echoes of the dot-com bubble in this moment. All right, and let's take a step back. The dot-com bubble, there was a huge amount of capital that flowed into what today we refer to as the internet. Now, the true winners and losers were not readily identifiable at the start of that whole bubble. But move forward 10, 15, 20 years later, there's no doubt that the world was radically transformed by that moment in time.
It's interesting when he says, quote, now the true winners and losers were not readily identifiable at the start of that whole bubble. Have we decided that we know who the winners and losers are this time, or the ones that we think? And they're the names, the very names that I read off those lists to you?
I think they've been a winner. I think that there's a whole nother class of companies coming, these AI first companies. There's a handful that I mentioned, those 4 that I mentioned that are at the top of that shelf, kind of this golden list. But we spend time in our venture business and look at these other kind of emerging companies, and they will be, I think, a whole battery of $100 billion plus companies that most investors don't know about. I think this, it is important to focus on kind of how narrow that trade has been, like you just described. But if in fact the impact is as big as I think it's going to be, then it's going to kind of spread out. I go back to Walmart CEO.
Well, the other thing is, look, like, I think we already know the winners. The winners are the top 20 companies in the NASDAQ 100, right? Like, most of us know the NVIDIAs, Microsofts, AMDs, Palantirs, Teslas, like all these companies are likely going to win dramatically. But what Jensen said last week, which I also thought was interesting, is that he said OpenAI could be the next multi-trillion hyperscaler. And so when we talk about bets in the private markets, obviously XAI, Anthropic, and OpenAI are probably some of the leading candidates. But if those all 3 get to $1 trillion, which at these valuations, I don't understand how they don't go to $1 trillion. All of them are at, multi 300-400 billion. So eventually they're probably going to get to $1 trillion if they keep executing. The question then becomes, who are the $100 billion darlings of the AI revolution, not the $1 trillion ones? The hyperscaler is going to be multi-trillion dollar ones. They're already multi-trillion ones. And that, I think, is an opportunity ripe for the most important AI companies to try to capitalize on. And if that's the case, I mean, where is NVIDIA? Where is Microsoft? Where's Google? I mean, we're talking about 5, 6, 7 trillion of value that these companies will inevitably get to if it kind of plays out the way we think it's going to play out. And those are probably the winners. And they are likely not slowing down. Raytheon, $5 billion contract after hours by the Pentagon. Let's see, that stock is flat, not moving too much, 164.25. Nothing happening here with Raytheon, but that is a $5 billion contract. We talked about the shutdown headlines. Oh, here's a chart that I want to show everybody. This thing is also interesting. This is government shutdowns and what happens. So again, the last time we had it was December 22nd, 2018 to January 25th, 2019. You had the Republicans controlling the House and the Senate and the White House. That was the last Trump administration. S&P was actually up 6%. If this is correct, yeah, S&P was up 6%. So the last time we had a 35-day shutdown, S&P was up 6%. The time before that was 3 days. S&P was up 2%. Last time we had a negative S&P was 95 to 96. Democrats had the White House. Republicans had the House and the Senate. S&P was down 3% during that time. So, I mean, hopefully it's not as aggressive as what we think is going to happen if we do get a shutdown, but maybe it's not as bad. The dollar was down 2% during that time. I think if the dollar went down 2% in today's environment, given the dollar's down 14% or about 12% this year, that would not be the best. The dollar was down about 0.5% today, 0.22%. But I guess all eyes are on the Republicans and Democrats in the next 24 hours to see what happens. Yeah, I mean, look, the markets did okay, but obviously it was not good for people that were out of work. I mean, dude, no one wants hundreds of thousands of people to go without pay simply because of politics. And that's what it is. It's politics at the end of the day. And the worst part is we vote for the politicians. So like we vote for them to avoid and not get into this type of nonsense. But because of their own procedural politics, this stuff ends up happening. And so I would imagine it doesn't last forever, but it's definitely something we're going to keep an eye on. All right, is that it for us today? We'll be back again at 9:30. Tannor, Roy, and I will talk a lot more Hood. We'll see what we've got going on. Again, massive day for Hood. I did not expect to have a 14% day. I did not expect the September data to come out, but thankfully Tannor showed us that data as well. We talked about the gold inflows. I mean, take a look at this chart right here. Returns relative to the S&P 500 this year. Platinum is up 5.5% or 5.8x the S&P 500. Silver's up 4x. Gold's up 3x. Bitcoin's up 1.7x. Copper is up 1.6x. So obviously we're seeing money that's allocated into a lot of other assets, definitely commodities and digital gold like Bitcoin outside of the S&P. But the reason this chart is, or the reason this like statistic is wild, is because the S&P 500, if it's still barely really moved 13.5% this year, if we've got another 7-8% to go, if we get 3 back-to-back 20% years, I mean, we're talking about a market that's going to be aggressive towards the end of the year. And that could obviously be very, very, very exciting as well. So we're going to see. We're going to see how this plays out. Amit, when are you launching your Substack? Probably in 2 weeks. I'm going to launch it with the first deep dive. So it will be out in about 2 weeks. The actual daily recaps should be out next week, starting Tuesday. So we'll have the daily recaps officially on YouTube starting next week. And then the Substack should be out in about 2 weeks. You had CNBC do a little piece of Robinhood. Let's see what they said right here, and then we'll end it out for the day.
Run for Robinhood. It's up threefold year to date, and shares are jumping more than 10% on the day, on track to close at a record high. Now, this rally follows a new milestone for the company. CEO Vlad Tenev saying earlier that Robinhood's prediction markets have now crossed 4 billion event contracts traded, with more than half of that volume happening in Q3 alone. Prediction markets let users wager on those yes or no outcomes, from Fed moves to sport results. And the fast-growing business has drawn investor buzz, but also regulatory scrutiny for blurring that line between investing and gambling. Investors are also digesting news out late Friday that Robinhood has started rolling out banking services meant to mimic luxury private banking and is part of that broader push to become a full-service financial hub and potentially replace the need for a traditional bank account. Scott?
You know, it's interesting. We're doing this story, and our Max Myers was pointing out to me that Robinhood's market cap is now slightly larger than KKR's, which had me thinking back to when PayPal had, just a few years ago, had a bigger market cap than Bank of America. It just shows you the fervor behind some stocks that have a sort of cult-like personality for a while. You could also look, Mac, at crypto's big comeback now today as helping these shares of Robinhood.
Yeah, and I mean, just think back to this summer when Robinhood cleared that $100 mark. It was pegged to this exposure to tokenizing private equities when they said that they would be offering shares of SpaceX and OpenAI. And that's something that Vlad Tenev has really been using as part of his push this year, the crypto ambition. So certainly seeing alignment there.
All right.
Robinhood, I was muted for 2 seconds. You can't get me there. It was for 2 seconds. Yeah, Robinhood is see, you guys don't even start the spamming, bro. It's 2 seconds. It's barely any time. It's not even enough to notice, even though you guys always notice. Robinhood is building a financial powerhouse. And look, the reason their market cap is approaching the legacy companies' market caps is because they're growing. Now, if they stop growing, this falls apart. But if they keep up the growth, investors are ready to give more capital to assets that can actually compound and grow. And, Robinhood has not had a bear market since 2022. So if we do get one, that's going to be tough for them. But if they can diversify well enough and really start to build out ancillary services in the financial space outside of just trading, which I think they've done a really good job of beginning to do, that's going to get them through the ups and downs of the market. And if we do get a bear market, I mean, this is one of the first stocks I buy. This is betting on America. This is betting on the next generation of people that are investing in the greatest companies in the world. So if we get any meaningful drawdown, 40, 50%, I mean, this is one of the first stocks on my list. It's just a question of if investors even give it a chance to get there because of their execution and because investors want to keep betting on it. So we're going to see. We're going to see what ends up playing out, but very, very, very awesome day for Robinhood. Congrats to everybody who's in it. It's exciting stuff, and it's cool. It's really, really, really freaking cool to go through this journey twice. We did it once with Palantir. We're doing it with Hood, and maybe we get to do it with Grab. But even outside of those three, I mean, so many different names people have been able to enjoy this year, going on just incredible runs, backed by real shit, not backed by speculation. I think that's the thing that I take a lot of pride in, is like, is there some speculative behavior in Palantir and Hood? Sure. But at its core, you can't deny those earnings. You can't deny SoFi's earnings. You can't deny NVIDIA's earnings. You just can't deny some of this momentum, which is important. Richard, thank you for the $18 super chat. He says, oops. Thanks, Amit. Thank you for oopsing into the super chat, Richard. Appreciate you. Oh, I see why you said oops. You sent us $2 super chat before. 2 plus 18 is 20. I got it. Richard, thank you for the $20 super chat. It means a lot. Awesome for Monday. Yeah, I mean, it's a pretty good Monday. Did not expect this type of a Monday, but it's not too bad. So there you go. I think that's what we got. We got through a lot of the other headlines throughout the day. You can go back to the chapters to see what we've got going on. Again, Anthropic's new model, that's a big one. Shopify ChatGPT integration, that's a big one. JD Vance basically telling us that we likely will get a shutdown. We'll see how likely that is going into tomorrow by around 12 a.m. And if not, then hopefully we can keep this market going. 1 day left of September. We'll see what we get out tomorrow. Hopefully, if we can end out around these levels, it'll be a pretty good month. Robinhood will have its first day trading above 130 tomorrow, so we'll see how that one holds up as well. But overall, not a bad Monday. Strong start to the week. And now we just got to see how we end out the final day of the month. All right, that's it for me. Thank you, everybody. Appreciate it. Love you all. I'll see you guys tonight at 9:30 with Tannor and Roy. We'll talk about Hood. We'll talk about Anthropic. We'll talk about AI stuff. Usually we get to a bunch of different topics on the show. We'll talk about SoFi as well. I know a lot of people have a lot of questions on that. Again, I think the pseudo upgrade this morning is just not that big of a deal. So we'll get into all those topics. And yeah, we'll see what else we got going on in the world of tech at 9:30. Again, the shutdown impact on the market, I don't think we fully know. I'm still not convinced we're going to have a shutdown. If we do have a shutdown and it gives us a nasty dip, I think people buy that dip because inevitably the government reopens. If we have a shutdown and the market goes higher, then it is what it is. So hopefully we don't have a meaningful shutdown, obviously for workers that are employed by the government. But we'll know in about 24 hours. And we'll keep going from there. All right. Thank you, everybody. Appreciate it. Element, thank you for the super chat. This is for all the other App Lovin' boys. We're in the shadows grinding behind Hood shadow. Well, App Lovin's done great. And the fact that it broke 700 today was also incredible. I knew that it was S&P 500 stuff when I saw App Lovin' and Hood both up 8%. But we were confused for the first hour of the day. We were confused, like, why is Hood going up? And App Lovin' gave us a much better understanding of why it's going up. It's because S&P inclusion. And I didn't know what happened today, but Seems like it happened today for both those names. All right. Thank you, everybody. Appreciate it. We'll be back at 9:30 for Tech Bros. Bye, everyone. Have a good one.